Welcome to today's episode of Derek and Best. Today, August 2nd, I'm your host, Derek Miller. As you can see behind me, it is still dark out. It's early in the morning. If you live on the West Coast, then you are used to getting up pretty early if you're involved in the market, which I am. And I'm going to do this broadcast a little early. I'm using the my outside light as my lighting, and actually this isn't too bad. So what I want to cover today, I'm going to do a second episode today. In the first episode, I'm going to go over some stocks that I didn't cover this week that have reported earnings. Okay, as you can see down there, McDonald's, on Starbucks, Moderna, Exxon, XEL Energy, and Dominion Energy. I'm gonna run through those stocks. We're gonna take a look at them and see what we see moving forward. I discussed yesterday in my second broadcast where I thought the NASDAQ was going, and I had it going lower and breaking the lows of Friday, but I also discussed the fact that those lows were going to be broken last Saturday. So I put a target on there for the Qs of 450, and it looks like pre-market is sitting at 452. So I would say 450. Oh, let me hold on. There we go. We're back into light there. I would say 450 is certainly in the cards. And I also mentioned that the target would be Monday. However, I would say that target would be reached today, which is what I discussed yesterday. So in this episode, we're going to go over some earnings. And then later today, 10:30 Pacific Standard Time and 1:30 Pacific Daylight Time, and then 1:30 Eastern Standard Time. I'm going to have a conversation on Bitcoin, what it is, what it does, how it works. A lot of people think of Bitcoin as a currency. I would say, it's not a currency. It's technically a property, and it looks like it's going to be the new gold standard, right? It will be gold over in the crypto world. And they will base currencies on the value of that. So I'm going to get into that, why I just made the statement I made later today. I'm going to let's get into these stocks. So I'm going to talk about that 10:30 Pacific Daylight Time, 1:30 Eastern Standard Time, and let's get into these stocks. I'm going to do a repeat of this broadcast at 1:30 Pacific Daylight Time and 4:30 Eastern Standard Time, and I'll probably do a repeat of the Bitcoin conversation later in the day as well, probably 3 Pacific Daylight Time and 6 Eastern Standard Time. So maybe if you missed that this morning or afternoon, depending on where you live, you can enjoy it then. Let's get into some of these stocks. We'll go ahead and start with McDonald's. Let's get a screen share going here. Oops, wrong one. Screen share. There we go. All right, here we go. So let's take a look at McDonald's. Sitting at 452, still pre-market. All right, MCD. Let's see what's happening, and let's do a full analysis. Now, they've already reported, which is great, but sometimes after a company reports, they'll use that report, their earnings report, as a way to drive price in a direction, either to sell more off or to buy more. It just depends, but they can use earnings to drive price to a place that really it shouldn't be, right? It shouldn't be there, but they used the news to either create excitement or fear. And so a lot of times looking after earnings is not a bad idea either. So if we look at McDonald's, I would not say, there's definitely a volume increase. I wouldn't call this a huge standout or anything. It definitely reached the lows of October of 23. In fact, it looks like it breached those lows. So let's zoom in on McDonald's and see what we see. That's interesting. So as you can see, this is the current volume. It doesn't really exceed this volume here. Is extremely interesting, and it's at the high. Okay, so that is an interesting little piece there. Let's see if it tells us anything about where price is headed, though. You have to like the way it came off the bottom. It used earnings obviously to drive prices up. What you want to know is, are they heading? Is this stock heading for new highs in the upward direction, or is this bounce off of earnings going to be used to drive to sell off this position and drive prices lower? As you can see, my light went off. It's okay. You don't need to see me at the moment. You just need to see this chart. Let's see. That doesn't tell us a whole heck of a lot. 1 hour. The one thing I will tell you about this position is it is moving very, very efficiently, meaning very few gaps. So price is being taken advantage of. When you're at a high and price is being taken advantage of the way this one is, you would assume that this is poised for a market drop as it approaches those highs again. When you look at this 1 hour bar, it takes, I mean, this is, and the reason you look at this bar, by the way, is just what it represents. We don't really care. I hate when people talk about bars, but what a bar represents is price movement. When you have giant price moves, for example, right here, you have a low of $250 and a high of $263. That's a $13 move, a $12 to $13 move in 1 hour on monstrous activity, which means that institutions were involved in this. Now, when institutions look to move price in an upward direction rapidly, is that a good or a bad thing? 90% of the time, 95% of the time, the most of the time, that is a bad thing. That means that they are driving price to get it where they want to sell off more. That is traditionally a negative sign, not positive. Let's take a look here. And now you see volume picking up, don't you? As it's up here at what? Almost 269, 268.50, whatever, 269. Ooh, my light came back on. So as you see volume picking up, I don't know that it quite matches earnings, but it's a standout on this particular chart. We're on a 15-minute chart here. Let's zoom in a little more onto a 5-minute, and it is definitely a standout on the 5-minute chart. So what does this mean? Well, if I were looking at this, and as you can see, pre-market's down to 267.50, I would say this stock's looking to go a lot lower. That's what I would say. But there are no areas where I can say this is a great price target. That's a great price target. It doesn't exist on this particular chart. What I would probably look for, this is your breakout price. This is a return to the breakout. I mean, to build up the energy, if in fact this stock is to go a lot higher, you're going to come back into this world here of probably 220. I mean, that's reality for this position. Now, again, there's just no major indicators. It popped this low of October and it had a huge bounce. Why is that? Well, with all the algorithmic trading, with all the AI trading, the computer-based trading, of course, they had a level set at that low of October of 23. They said, oh, that's the previous low. That's where we should have support. So once price popped it by actual humans trading, realizing that these computers are going to set their levels in the same spots every single time, and they're extremely easy to beat. You like how I threw that in there? As soon as that level popped, of course, price rose because they were just looking to pick up some shares. That is probably positive. The way price rose and the manner in which it rose doesn't fare well for this particular position. Your risk here is, you have 30 to the upside, but you probably have, 70 to the downside. So, from a risk reward standpoint, this just isn't a great position. It just isn't. Let's see. Let's move on to On and then StarBucks. All right, let's take a look at On. Oop. On, here we go. Let's take a peep. Let's have a peep. On pre-market isn't doing a whole heck of a lot. It's kind of sitting where it's sitting. Is there anything we want to look at here? Well, at least this stock has existed for a long time, but it's also had 20. So what? Oh my gosh, it went to 110 It had a 600% move. Yeah. I mean, it's a semiconductor. We know that those have been moving. There's nothing here right now that's poking me in the eye. Let's zoom in a little bit and see what this semiconductor is telling us. Here's a gap, but the gap filled, and that's not good because the gap filled, and now we're returning to a downward move, right? If this gap filled on big volume, which is what? Big volume is a big trading activity. It's a lot of trading activity. What is a lot of trading activity? How can you create standout trading activity on a chart? There's only one group that can do that. That is institutional players. That's an institutional footprint, guys. This is a very easy institutional footprint. You also see one back here. What did this create? This institutional footprint here is at a low of a price, right? So it's after price has dropped. Look what it created. It created, a move from 50 to 110. Now, this is darn near, it's standout activity at a minimum. And now price is moving downward and it's not being caught. Okay. It's picking up steam in the downward direction. So that is probably not a very good thing for on. Here's this was a gap up. Oh, that all right, that's good actually. You want to see gap ups. That is a gap up at a low price is usually kind of exhaustive. They want to bring price back down, most likely to fill this gap right here. Let me zoom in on it right here. So on semiconductor, probably, and this is your immediate gap, the one that has filled since it reported. It gapped up on when it reported, and now it's pulling down. I would say, you should see, yeah, 62. So let's go ahead and throw up 8 to 24. On 62. You know what? Actually, let's wait to do this. We're on a daily now. Let's zoom in a bit. Let's zoom in a little bit. I want to give you something. You know what, though? No, let's zoom in. Let's zoom in. There might be a more near-term target on this. Now, that's a daily chart, right? So you're looking at 6 to 12 months where you're saying, 62 is in play, but this is in the semiconductor area, which is attached. It's like one level below AI, right? So that'll happen much, much quicker than that. But let's zoom in. Let's see how they used all this activity to create this gap that is now reversing. I mean, this is institutions, everyone. This is an institutional footprint. This is groups of people. And, a lot of people find it hard to believe that these groups move in tandem. Oh, what are they getting together and sending each other emails? No, they don't have to. They're all on the floors together. They all communicate together. They're all in the same chat rooms. They're all in the same Discords. And it just kind of happens. It's not a conspiracy. But it's easy to identify. I don't need to be in their chat rooms. I don't need to see what they're talking about. I can see what they're talking about by pulling this screen up, okay? You don't need all of that fluff. I certainly don't. And I pick positions every single day, and price moves every single day. And I don't use that information because you don't need that information. It's evident. You can see it when you pull up a chart. A chart is the story of what's going on in that particular position, industry, sector, index. Okay, so let's zoom in a little bit more. I'm not trying to be gospel-y here, guys, but some people tune in for the first time and they have to understand how and why we do what we do here and how effective it is. Now, how effective it is, you can go back and look at my accuracy. I will go head-to-head with anyone. This gap is about filled. So this is your near-term gap that's filled. I would look for on semiconductor to go to head, by year end down to 62. It's a semiconductor, so it can go there much quicker. Here you have a gap higher. So you filled this earnings gap. They gapped it down, which this bodes well for higher prices, by the way, near term. See, that's why I said I wanted to zoom in, because if I didn't zoom in and I gave you a price target of 62, now I would tell you this: if you know how to build an actual portfolio, if you know how to actually place trades, right now you're simply going to go short term to, I mean, you could even go here, right? But we'll put the target here at 77. This is going to be blue. You're going to build out both positions. So what you would do in this case is you would say, well, I'm going to talk as I do this. You would say right now, hey, in the short term on semiconductor, I'm looking for $77, right? And then you're going to say on a longer term time basis, probably 6 months. It's a daily chart, so it can be 6 to 12 months. I am looking for, where's my dollar symbol there? 77, and we will be, now remember, we don't want to fight the market, right? Hold on, I'm going to go through that in a second. On a longer term, so I would say because it's a semiconductor, you're probably only looking at 6 months. You're going to start building into your short here. You realize that probably this is the area to start shorting to get down to that 62, right? So what you want to do is nobody just buys all in on a position. And if you're doing that, listen, you really need to get some guidance. That is not any way to manage your individual investments. And that's certainly no way to manage investments, period. Target date, it's going to be next week. So we have the 5th, 6th, 7th, 8th, 9th. This won't take a week. If we were trying to be extremely accurate, we'd probably just say the 7th. You know what? Let's do it anyway. Let's say the 7th. Whereas for someone like me, I don't really care if it's the 7th or the 9th. But some people like to play options super tight. I don't really see a need for it. There are so many good positions out there. There are so many ways to make money in the market that trying to pick the exact day to get these monster moves, it just adds up to a ton of stress. And you'll be wrong more than you'll be right? Because it doesn't take much to be wrong on a date. Okay, a date that you're trying to guess, like, is it this day or is it that day? Doesn't matter, okay? But what you do want to also remember when you're looking at this is the market's moving against you right now. The Nasdaq's moving against you, right? We should break the previous lows, which are 454 on the Qs. We already have, according to pre-market, it's 452. Does it end there? Does it hit 450? It probably does hit 450. Then it's going to fill that gap. And then there's a chance that it could come back down to look for supply before it takes off in the upward direction. So that's why I said this should fill probably Tuesday or Wednesday, the 6th or the 7th. But we don't know exactly where does the down move end today? That will be my guess. The down move of the Nasdaq ends today. That will be my guess. Maybe it takes until Monday. Well, now you're pushed out a day. In any case, you should be looking at $77 in the short term, and then on a 6-month time frame, and I'll be happy to put that up. You should be looking down there at that 62. You should be looking right here. All right. And you should be building into these positions. Now, your long position, well, first off, you should already be there, but 8 to 2024. Let's do on 62. And now we're going to give a target date of what? Let's just say 12/31, the end of the year. I don't think it'll take anywhere near that long, but it doesn't matter, right? If you're building into that short, however you short, right? Whatever you do to cover your positions is what you're going to do here, okay? Maybe you're going to go in and buy options on. Maybe you own on, so you're going to buy. There we go. So maybe you're going to short some futures. I don't know what you do to hedge your risk. Me, when it comes to individual positions, I short them and long them, period. Maybe I'll short the industry or the sector, right? Which you can do via ETFs. There's a lot of things you can do. I go over all this stuff in my mentorship course, which I'll be starting in just about 2 weeks from now. I'll be talking a lot more about that in the future. All right, let's get through some of these. Starbucks, MRNA. This happens every time, right? Because I talk too much. Starbucks. Let's look at Starbucks. How's everybody feel about coffee, huh? Starbucks. Anything? Woo. Woo. That's a monthly too. Weekly, anything? Nothing in particular. Daily. Oh, that's going to have to fill. Came close. It's filling gaps on the way down, huh? Ugh. So this is probably a buying opportunity here. Let's zoom in. This is a daily, by the way. We got to zoom in much, much tighter to have a real time frame on that. All right, 1 hour. Ooh, gap down. See, gap downs are good. Gap downs mean they want to pick up more supply. They are institutional money managers, institutional. There's a ton now because there's a million trend followers that all are looking at support, resistance, Fibonacci, and moving averages. And I think some of them even use relative straight RSI, which is insane because that if you're using RSI on your chart, you have no idea that indicators are all lagging indicators and all used to deceive you. Bollinger Bands, all that crap. Yeah, nothing in particular here. Let's look at Moderna, mRNA. Nothing. Let's look at Exxon. Energy's been killer. So let's take a look on a monthly. There's a ton of buying down there at 30 to 40. Where do we sit now? Oh gosh, it's up 400%, guys. And you're sitting at a high. Is that good or bad? Well, it's not good. Weekly. Let's see. Yeah, you're sitting up in a range. Let's look at XEL. I'm trying to zoom through some energy companies. I don't want to simply look at oil. Ooh, tell me this isn't an institutional footprint. This is a very large institutional footprint taking place down there at 50. You're sitting at 60 now. No kidding. You'll be sitting, this is weekly. Wow, this is going to run. They're building up steam. 1 day. Look at that. This is why. Look at the price drop. What did I tell you about big, large bars, big, huge price swings on big volume? If it's heading in the upward direction, it's not good. If it's heading in the downward direction, it's fantastic. Typically, I shouldn't just make blanket statements. Typically, in this case, it is 4 hour, 1 hour. This particular company is a good thing to own if you're looking to own out 12 months. It's filling gaps on the way up. Not here, but it did here. It did here. And it's moving pretty far from this gap. But it looks like gaps fill in this particular position. So it should probably return down there to 54. It's at 60 now. So that shouldn't be too shocking if you own this. If you own this XL, you have a good, I mean, you really, it's being purchased. This is for those of you that are intelligent enough to know that tax planning is part of your investing. This is, and you run your portfolio accordingly, which means 50% of your money, hopefully not the 50% in an IRA, you hold long term so that you get long-term capital gains. This would be one of those. This would be one of those. Yeah, this is lovely. This is a great. When you see a monthly bar like that, there you go. This is a great long-term hold. XL. Eight two. Whoop. 8/2, 2024. I might have time to just fire one more off here to take a look, and then tune in at 10:30 Pacific Daylight Time this morning, or 1:30 Pacific Standard or Eastern Standard Time for my conversation on Bitcoin. Going over what it really is, why is it property, why did I say that it is the new gold for the digital marketplace. There we go. Let's remove these. Where are we at? I can do another one. Let's do another one. We did Excel. We'll do Dominion Energy. And we actually will have gotten through all of them. Dominion. All right. Well, I love this volume bubble down here. That's good. Let's take a look at a weekly. Look at that volume picking up down here at these lows. Another good one. 40 to 48. Weekly. Let's go to daily. There it is back there. Yeah, I definitely don't like this. I don't like, what did I tell you about big price moves in an upward direction on volume? Now, it doesn't have massive volume, but that's enough. And that price move in an upward direction is a standout. I don't like that. 4 hours. Yeah, look at that. It's just, I don't like that. It's trying to break through this previous level by moving price very quickly, which means it'll 95+% of the time it'll return to probably here. Okay. There's not a lot on Dominion. I mean, this big price, this giant volume on a price move up, it's negative, not positive. You'd play this to the downside. Let's stop the share here. All right, everybody, remember, if you're not good up here, you're not good anywhere. If you're having a bad day, get outside. Wait for the sun to come up and get in it, right? Smile. Fake it till you make it. Sometimes that's the best thing you can do. Sometimes it's the only thing you can do. And remember, you haven't failed yet, and I don't believe you're going to. How can I say that? Well, you haven't failed to date, right? You're batting 1,000. You're doing amazing. You're still here. You're still tuning in, right? It's a good thing. All right. Once again, Bitcoin conversation, 10:30 Pacific Daylight Time, 1:30 Eastern Standard Time. I'll announce when I'm going to do the repeat of that, the replay of that, but I think it's going to be 3 p.m. Pacific Daylight Time and 6 p.m. Eastern Standard Time. And then I will do a replay of this video at 1:30 Pacific Daylight Time, 4:30 Eastern Standard Time. Thank you